Welcome back to the Home Path Podcast. This is Raphael, and today we're going to talk about the down payment dilemma. Some of the secrets about buying a home with little to no money down. So there's a big misconception that I hear all the time about these no money down programs. I'm going to give you the truth because I feel like a lot of times you're misguided, and then you have these expectations because you watch a TikTok video. And, a lot of people think that you're going to get into the home with literally zero down. And unless you have some, programs that are stacked with each other, there's a couple of things that you need to know is that majority of the down payment assistance programs that are out there are, for the most part, not forgivable. They're more of a second mortgage or a silent second. Some have interest, some don't. Some are city backed, some are funded by the banks. So it just depends on the place that you go. They're not all going to be the same, and they all work to some point. So for the most part, they are just FHA or first time home buyer programs that would help you with a down payment assistance. It's not a grant. I think maybe there's one bank out there if they're still having a grant. But the assistance, for the most part, needs to be paid back. And it's not free because it's their money and they're going to make money. So usually these programs they have some interest attached to them. And sometimes because they are putting the money down, your first loan will have a higher interest rate because they are trying to make money on it. So it's not necessarily a free program, but it is assistance. And therefore, you're probably not going to get the lowest interest rate, the FHA, interest rate, because those programs tend to be a little bit higher, and they don't cover what's called earnest money deposit. So when you open escrow, that means when you get pre-qualified, you go look at homes, and then you write up a contract with your realtor, and you submit it, and the seller accepts it. The first thing that you have to do is you have to open escrow, and that's usually 1% of the purchase price. So if it's a $500,000 purchase price, you'll need to open escrow and put in a deposit of $5,000. That's an example. Now, where does those $5,000 come from? That comes from your pocket because you're getting down payment assistance. That doesn't mean that the bank will front the money in advance. So that is a big misconception that I get, whether it's a newer realtor or someone that's trying to get pre-qualified. You still need to come up with those $5,000 on your own, and it needs to be seasoned. I mean, it can't be mattress money. It can't be borrowed. Sometimes what it can be is a gift from a parent or a sibling. And those you can use depending on the program. So that is something that you need to account for when you're purchasing for a home. And then there's other additional costs like your inspection. Everybody should get an inspection, right? You're not even if you're buying a brand new build, you need to know the what's under the hood. So a lot of times it's good for you to get an inspection on the home to know what you're getting yourself into. And those can, run a couple $100, $400, $500, $600, $700, depends on the home and the inspector. And then the next thing is your appraisal, because the property needs to get appraised. So that is something that is also not covered by your down payment assistance. So a lot of people get this, this misconception that they're just going to get in for absolutely zero, and it's not the case. So sorry to burst your little TikTok bubble, but there is something that you need to have reserves sometimes, because also moving costs a lot of money. So you can't be in absolute zeros, because you're going to have a terrible, terrible experience if you think it's just, like absolutely nothing. You still need to have some money. And part of the down payment dilemma is that, if you don't have it, there are programs out there. Just be prepared that it's going to be a little bit costly on the rate. And once you're aware of that, at least if you have the bare minimum, some of the things that you could do is, if you do find a home where the seller would like to contribute, then they can help you with what's called your closing cost, because most down payment programs do not cover closing cost. So there's a lot involved in here. Buying a home is not, zero down. Is, yes, zero down on the down payment, what is required, but then there's additional costs like your earnest money deposit, your inspection, your appraisal, and then your closing costs, because there's another party called escrow and title that get involved. And then you also have prepaid taxes, insurance, and other things that get added into what's called the closing costs. And closing costs on average could be about 2% of the purchase price. And that also needs to come from somewhere. And most programs, down payment assistance programs, do not cover what's called closing costs. But if you do find a home where the seller would like to contribute or pay most, if not all, of your closing costs, that could be negotiated, where you have the bank do the down payment assistance and then the seller contributes, which is common, not guaranteed, but it is common where the seller can contribute to your closing costs. But that still leaves out a couple things. Your earnest money deposit does not come or cannot come from the seller who's going to contribute to the cost. And then it can't come from your down payment assistance, because the bank doesn't do that until the very end. So that leaves you out with possibly paying for the credit report, the inspection, and also for your appraisal. So you have a couple things that, even if you did stack a couple benefits towards your closing cost, you still need to have some money. So there is a lot out there that you could literally say, you know what, someone's going to cover my down payment through a program, and then the seller's going to contribute. I mean, you're getting almost to zero, but you're not going to get away with literally zero money down, because there's still some costs associated with this. So make sure that you are still putting yourself in a position to understand that it's not going to be completely zero, and set the right expectation, not just with anybody, but just know that is the best experience that you're going to have, is just knowing that it doesn't go down to zero, and knowing the cost involved, because down payment assistance with no money down does have some back end fees to it that you need to be aware. That once you are aware, you can prepare yourself. And how could you get some of this down payment? Well, a lot of times you could find different resources, because a lot of times we do come across a lot of money as people who want to buy, but we don't save it. So if you do have a great paying job and you have your rental history, but you want to stay away from a higher interest rate because it's assistance, well, there's a couple of things you can do. You could save your tax return. You could say, you know what, maybe I can put the money down, but I don't have the closing costs. And I see this so often, and this is why sometimes this works, is because maybe you have the closing costs, but not the down payment, or vice versa. But it's always great to at least cover one or the other, because maybe you do have the down payment assistance, and then you find a seller who's willing to cover the closing costs. So don't shy away from all these opportunities, but make sure you put yourself in a position that, it's good to have some sort of resources. So you can save your taxes, you can start driving Uber, you could do a lot, sell a lot of stuff in your home. There's just so many things that you could do in order to make some extra side income over the next year, in order to save potentially not maybe your down payment and also your closing costs, but one or the other. And I've just seen so many great people be able to get into a home because they took advantage of the down payment assistance, but they had their closing costs to be prepared in case the seller did not want to pay for their closing costs. So there's a lot that you can do by just being able to prepare yourself, get yourself educated, but at least you're going to need your earnest money deposit, which is usually 1% of the purchase price. You're going to need to pay for your appraisal, your inspection, possibly your credit report, and one or the other. So it's always good to at least start working your way towards it, and just know that at some point you could always refinance. So you could restructure your loan down the road where when interest rates come down, and if you do have one of those loans where you have down payment assistance and you need to refinance, you would be able to get a lower interest rate, which would lower your payment down the road as well. So hopefully this helped, gave you some clarity on what to expect when trying to get down payment assistance or how to buy a home with literally with no money down. Remember, there's some costs associated with it, and you do need to prepare yourself financially because there's some costs that doesn't matter if the bank covers your down payment and the seller covers your closing costs. There's still some costs associated that still belongs to you that can't come from other party, and you need to be prepared when you do so. Hope this helped. And if you have any questions, head on over to CaliforniaHomePath.com, fill out one of the forms, and we'd love to talk to you about some of your questions. And we'll see you on the next episode.